Good evening, everybody. All right, we're going to use a little bit of a topic tonight of our trend analysis, kind of morphing into trend channels, just to give us kind of another feature for how to use candlesticks effectively. So, anyways, we'll go through this real quick, and then we'll go and show how we use the trend channels live. So, part of this with a trend analysis, always when I start out this session, I asked a rhetorical question, why is trend analysis important? And it's very simple. It allows you to put your positioning in the direction that you want to be mostly positioned. Obviously, in an uptrend, you want to have most of your positions to the long side because you want to go with the flow. If the market's heading down, obviously you want to be oriented toward the short side. So when we say markets, a lot of people ask, well, why do you use the Dow? There's only 30 stocks in there. And the reason for that is it's relatively accurate as far as analyzing what's going on in the overall market. But the fact that we can use the Dow, the NASDAQ, and the S&P 500 takes all of a matter of probably 15 seconds total looking at the chart, seeing what they're doing. So obviously, if we're in an uptrend, we're basically long. We're in a downtrend, basically short. And part of that's going to be kind of amplified, or let's see, better clarity as far as which way your moving averages are moving. For those of you new in here right now, the 200 is the red, the blue is the 50, the gray here is the 20, and those are simple moving averages because that's what all the money managers around the world use. Then we have the T-line. T-line is very effective for using with candlestick signals. Let's see. And there's going to be times when you realize the trend moving sideways. So what do you do in that situation? Well, you got to remember, out of 10,000 positions that are tradable out there in the markets, using simple candlestick scanning techniques, you're going to be able to find at least 5, 7, 8 good long positions at any one time, and good 5, 8, 10, 12 short positions at any one time. So if you've got a portfolio, and we'll kind of go through our portfolio management at halftime, kind of explaining how we keep our emotions out of our trading. But let's say we decide to have 10 positions in our portfolio, and the market's moving sideways. You're going to be able to find 5 good shorts and 5 good longs. So again, the trend analysis is important, especially if we know that trends move in waves, wave 1, wave 2, wave 3. And if you utilize the T-line, this is probably the most effective indicator for confirmation that I've come across in the 40 years that I've been using candlesticks. And it's got a very simple rule to it. Again, the T-line is the 8 exponential moving average. And very simple rule. If you see a candlestick buy signal and a close above the T-line, you can stay long until you see a candlestick sell signal and a close back below the T-line. Nothing more intriguing than that. So the advantage we have with candlestick analysis is if we can see channels setting up, and that really is equated by, from this point, we don't know if there's a channel setting up, so we're just looking at a downtrend. That in the oversold area we see a buy signal, bullish engulfing, comes back up into this area and starts back down. Well, if we can draw a line through the top, so we can pretty much draw a parallel line through that one point at the bottom, makes for the next likely target. I say likely. It's a feasible target. From here, it might be coming back to test the 200. If it doesn't support at the 200, Now look what we can see. If we extrapolated this line out with a parallel line down here, right smack dab at that level, we're seeing buying. There's a kind of our morning star signal. Start back up. Where are our targets? First target is to see what's going to do at the 50. Next target is if you take this line straight out, see what happens at that point. When I say you see what happens at that point, you see a long-legged doji right at this top of the trend channel. We have our very simple analytical rule of the doji. It's going to move in the direction of how they open after a doji. If it opens lower, we're pretty much convinced immediately that that's the top of our trend channel. So trends can be observed, and utilizing candlestick signals, we have a lot better probabilities of telling us when we're in a trend and when we're breaking a trend. This was a case where the market was moving up steadily. At the same time it was moving up and down on the Dow, we were having the same criteria going on in the NASDAQ. And on any given day, if you're doing trend analysis and it's moving in a slow trend, if there's a day where the Dow is moving up and the NASDAQ is moving down, just tells you there's money shifting. It hasn't changed the trend. But it was at some point like this where we saw a doji on the bottom of the trend channel, that every time we saw that happen, we saw bullish confirmation. Well, the next day, if we woke up, when we did wake up, and the pre-market futures were down 140 points on the Dow, that gave us a pretty good indication. They weren't taking it back up. They were breaking this trend channel. We want to be out of that position. At the same time, we saw a bearish engulfing signal at the top of the trend channel in the NASDAQ. And the next day, they're gapping it down. That gives us a immediate, I want to say, confirmation that the bears have taken control with great strength. We want to be out of any long positions that look iffy immediately and start going short. So trend channels are part of that analysis of a trend. If we see 2 points and draw kind of a parallel line, we're waiting to see what happens. Wouldn't happen there. But if we can see that there's kind of a trend channel developing, that means down here, if we start seeing bottoming action right about the same area you would see a parallel line, that means you start looking, especially if your stochastics are in the oversold area, just tells you the probabilities are pretty strong that we're starting to back up in an uptrend. And if we don't resist here at the 50, where do you think our next target's going to be? Well, if you extended this top of the channel right in here, look at all the things that are telling us that we're probably resisting up here. Our doji, shooting star, tails to the upside, failing right about that same level. And we start seeing a sell signal. Where was this all occurring when stochastics are in the overbought area? So this just kind of gives us a much more accurate read of when to start taking profits, because there's a reason to take profits here. You're in the overbought area, you're starting to see sell signals, even though they're not confirmed by going back to the T-line yet. It's telling us that this is where they're failing, right here at this resistance level. So when we're analyzing any market or anything that we're trading, if we can draw a line between 2 points and take that bottom point and draw a parallel line, this is where we should be anticipating some buying. That's our target. We get a much more clear, faster indication what's happening down here by seeing a lot of reversal signals and then a close above the T-line. Once it does that, where's our next target? Well, if you extrapolated this out, right about in here. When it gets there, what type of signal are we getting? Bearish Harami? What other indicator do we have? Well, look how far away we are from the T-line in the overbought area. If the bearish Harami is confirmed the next day, where do you think the next target's going to be? Back down to the T-line, which tells us this is the top of our trend channel. Do we want to start going short? The next day, if they start taking it back below the T line, where's our next target? Extrapolate this line out. Notice what happened down here. A doji bounced right smack dab off the 200, right here at the bottom of the trend channel. Big, huge buying, big morning star signal, close above the T line. Where's our next target? See if it moves all the way back up there. So the advantage we have with the trend channels is that we can calculate where we might see selling, where we might see buying, and what our next targets should be. So anytime I can see that a trend channel is setting up, and I'm shorting up here, I start watching for the buying at the bottom of this trend channel. What was a clue that this was the bottom? Where do most people sell? They panic sell at the bottom. Stochastics in the oversold area. If I start seeing it go flat and I'm short, I'm covering my short position, because what are my probabilities at this point? They may have hit a support level. They gap down to get here in the oversold area, and they aren't selling it off. So there's too many pieces of evidence here that says this is where the buying is starting again. Close out your short positions and ready to go long again. So we have the advantage of using support and resistance levels. Whether your trend channel is kind of a wedge formation and they finally break out to the upside. Again, if we can see a bottom of a trend channel and the buying started, we could be buying with a lot more confidence, knowing that this was a lot of dojis right here at the bottom of a trend channel. First target, second target. And what else do we got here? So the trend channels work effectively for telling us when we're in obviously a trend. And as you can see on any market indicator, the Dow, evening star signal, well above the T line. Closes below the T line, next target. 200-day moving average, morning star signal. How long does our uptrend last? Until we see that sell signal and a close below the T line. So trend analysis is very important for telling us how heavy we want to be in, long or short, or even if we want to be in the markets. This last summer, we were moving sideways ever since June. Took a drop, moved sideways again. I mean, it was probably one of the most boringest markets I've seen in decades. But we can use the advantage of trend channels to our advantage by knowing what patterns break out of those trend channels. So the nice thing that we've got going for us is that we can analyze what's happening based upon a trend channel when the channel breaks out by one very simple indicator, the most consistent indicator in the world that's worked consistently through hundreds of years. That's basically your human emotions. So we're kind of not pushing, but kind of adding this to our education. We are adding a video. I think it's usually about I forget what it is, $147. But we've got a special going on, obviously. Let's see if I can do this. Oh, pshaw. Becky, you got the link? There it is. Save me from. So there's a link. For $17, you get this, get the video. And again, like hopefully our information, you're going to get a lot more, get more than your money is worth. So take a look at that. So I'm going to shut down and we'll get to live charts. Let's see. Close this down. And I'll probably spend just as much time and energy analyzing or worrying about what your $2,000 position is doing as well as your $24,000 position. And if your $2,000 position goes up 48% and your $24,000 position goes up 4%, there's heck no way to calculate what your overall returns are. So I've got a very simple formula. You've got a portfolio with X number of dollars. Decide how many positions you want to put on. If it's 10, you decided, say you have a $500,000 portfolio, you're going to buy 10 $50,000 positions. Because what that does to keep your emotions out of your trading is each position now is one unit of your portfolio, not one that you like better than the other or you think is going to do better. And now you have a much better analysis of what your returns are based upon that every position is the same dollar amount. And just like human nature, if your normal position in a portfolio, let's say you have a $100,000 portfolio and you've been buying $10,000 positions, and you decide one day, oh, this XYZ looks fantastic, I'm going to buy $25,000 worth of this one. You can bet your dime to donuts that you're going to spend 95% of your time watching the $25,000 position and very little time watching the smaller positions, your $10,000 positions. So the other part that helps you out with the emotional detachment is that because each position is one unit of your portfolio, if you find, using the very simple candlestick scans, that you find a great position tomorrow, you say, man, I'd like to get into that. Well, you keep yourself at 10 positions. So what you do is a cultivation process is you go back and you look at your 10 positions and say, oh, position number 8, looks like if it opens lower, it's probably starting to sell off. It hasn't gotten back to the T-line yet, but it's already had a good move up, and it's starting to get a little bit soggy. Your analysis now becomes, is my upside potential greater to stay in position 8, even though it hasn't shown a true convincing sell signal, or am I better off getting into this new position that might have a good, huge upside potential? And what this basically does is it cultivates you out of positions that are getting a little bit iffy and putting your money back into positions that have high probabilities going for it. So with that, if we are doing a market analysis, we can see what's happening in the Dow. I think we can see. Oops. Comes up, pulls back. Comes up, pulls back. Now where's it pulled back to? Right smack dab to the 50-day moving average. I'm sorry, this isn't the Dow. This is the Dow. Right back to the 50-day moving average, and today it just climbed up above the T-line. So if we make this a little bit bigger, stochastic's coming up, bouncing off the 50, closed above the T-line. If it breaks out through the 20, we're probably in another good up wave. At the same time that we're analyzing the Dow, we can see what's happening in the NASDAQ. Kind of a belt hold bullish engulfing, and you're well up above the T-line. And I thought, yeah, I guess this actually was the highest close ever. Not the highest trading, but the highest close day in the T-line or in the NASDAQ. Then you add the transportation index, which now has come up well above the T-line, breaking this downward trend channel. Shows you as long as we're above the T-line, we're probably in an uptrend. So we're looking at uptrends or looking at trend channels in individual stocks just as relevant as if you're doing it in a, let's see if I can do this. Kind of have this scenario where you've got kind of a trend channel. So buying down here was a relatively safe endeavor. You've got stochastics in the oversold area. Where's the next target? Probably up toward the top of the trend channel. Let's see. So NTFT, another one, is another concept where you've got kind of your trend channel down through here. And what did they do? They gapped up through this level. That usually indicates there's going to be another strong price move. AKAO. You can see the trend channel up through here. They've fallen below it. Now you've had your cradle pattern. They're usually going to come right back up into that trend channel or that trend trajectory. So usually from right in this level to here is usually a good pop. SA. Make this a little bit smaller. You can see there's kind of a trend channel up through the tops. So if this is pulling back, where do you think the next targets are? If it fails here at the 50, it's coming back down to test this level. So just like any other indicator that we can put on our charts, we've got a much faster indication of where they're supporting, whether it's a Fibonacci number, a moving average, a trend channel, a support and resistance level. We can see with much faster indication where the buying has come in. And Pega, kind of the same scenario. You can see the trend channel up here, and the bottom of the trend channel had bullish signals, kind of a little scoop pattern. Where's their next likely target? Way up to the top of that channel. Okay, let's see. Had a few. No. So what we're looking for is not only a trend channel, but we're looking for that kind of steady eddy where we have something using the trend line. Like that's what our recommendation on ASX was based upon the breakout of this little sideways channel. Because remember what the Japanese rice traders tell us. Let the market tell you what the market is doing. So if it's steady move up above the T-line, sideways, we're probably in another steady move up above the T-line. We've seen that in Apple, just a steady eddy right now. Hasn't been able to close below the T-line. Kiwi, kind of your J-hook pattern, but notice what the trend told us. Steady eddy kind of stayed above the T-line, pulled back, J-hook pattern, stayed above the T-line. Still hasn't really closed below the T-line. So it's kind of giving us an indication that it's consolidating, waiting for its next move to the upside. How do you deal with a channel that is widening? Just draw the lines through the tops and the bottoms. And remember, that's called your spreading formation, kind of a megaphone where it gets wider. Those moves out at the wide end will get to be very big. Oh, the Ichimoku cloud is kind of just a trend projection. I don't use it because I don't need to because I got the T-line. But I'll see, Hubert uses it quite a bit. We'll see if we can get a cloud session again. All right. What else we got here? Oh, the biggies right now are all kind of in trend channels. I have this channel, and it's broken out to the upside on Netflix. Amazon, same scenario. Kind of had this sideways channel, and then you have this little scoop pattern breaking out to the upside. I would suspect more upside on Amazon. Yeah, the cloud is usually for longer term analysis. All right. If repatriation of overseas money is allowed, would you look to buy those stocks? Not necessarily, Gwen. I wouldn't know what to do. So the only thing I do is look at the candlesticks charts, and that gives me a good indication of what everybody else is doing. How does this fit in with futures? KS, you got to remember what the most basic of all candlestick analysis came from was Rice, the most slow-moving, basic futures in the world. What is the name of the lower chart? This is the stochastics. So I should have done some. We can analyze what's going on in all markets. Here's the crude oil market is bouncing back up after it broke kind of this little trend. Where's the next target? Probably up here at least to the 200. We shorted sugar today when it came down through this level, because that would have told us we have a bearish J-hook pattern in progress. Then I look at the trend. Oops, that trend was awfully steep. But this is wave one. Wave three should bring us down into this area someplace, which that would still be, maybe it could get all the way down here. We also are short soybeans. We shorted soybeans when it broke down through the bearish J-hook pattern. We moved our stop down to this level today, or from last night, because look what we had. Let me make this bigger. We're in the oversold area, and we started seeing dojis. If it traded back up through this level, that would told us that was the bottom. The fact that they broke it down told us we're still in our downtrend. So very simply, we move our stop from here down to here because we're in the oversold area. What would happen if they could bring it back up through this level? Well, we'd have doji. Now it looks like a bullish engulfing signal in the oversold area. That tells me that's the time to be back out of that trade. So Gary, with Gary's, there's just very simple rules, and it's not rules that we've made up. It's rules that that if you see what occurs in human nature time after time, you got a little trend right here. What's that tell us about our overall trend? Wave one, wave two, going into bearish wave three. So we stay short until we see a buy signal. And Shopify. Nice steady eddy. Hold back. Next wave, steady eddy. And when do we get out of a position? When we see a candlestick sell signal and a close below the T-line. So if you didn't close this one out today, it has to open positive and trade positive. If it opens positive and starts trading positive, you simply put your sell stop right here, because if they take it up and then came back down to that level, that tells us that signal is being confirmed. You want to be out of that position. Did I do Kiwi? Yes, I did. All right, so the other patterns that are working well right now is you start watching your fry pan bottoms. This one was pointed out by David L. today. You can see the big fry pan bottom. You can see the slow curve and how did it start with a bullish engulfing followed by a doji sandwich, doji sandwich, doji sandwich breakout. This has the potential of a big price move because notice your big gap area up here. If it gets in there, you don't have any resistance. You can get a lot of running room on one of these. OLED, OLED. Fry pan bottom setup up here. You can be buying this one on positive trading tomorrow, breaking out through this area. We bought MLX today because you can see kind of the fry pan bottom. And what do they do coming out of the fry pan bottom? Your best friend signal. The doji gap up through this level. What do we expect now? Probably another wave like this to the upside. Why? Because your best friend breaking out of a fry pan bottom, your best friend is usually your very strong price move. Breaking out of a fry pan bottom, a very strong price move. And this is clearly indicated by our recommendation on buying MZOR. You're in the overbought area, but you came out of this little fry pan bottom and you came out of this fry pan bottom. This usually indicates a wave, big fry pan bottom. This move could take you up into the trajectory. So the target right now on this one is somewhere around 42 to 44. And NVGS, we recommended a couple of days ago. You can see the big bottoming action right now. You can see how the fry pan bottom is setting up, with this being the dimple. So we're looking for it to come up here and break out, putting you back up into this trajectory. So being able to visually recognize what patterns are setting up and knowing what the results of these patterns are. Now here's one that is got a fry pan bottom, CTRL, and it opened positive and broke out. Got a nice fry pan bottom breakout. But there's also a very simple rule for a fry pan bottom. How long do you stay in a fry pan bottom? As long as you don't see it close back below the T-line. That will continue to push things up. And right now, if you didn't buy today, which probably you shouldn't have, because I think we had our buy it above today's high or yesterday's high, if it comes back up through this level in the next couple of days, you can see the fry pan bottom is still working, getting ready to break out. Now the advantage again of the patterns is all markets move up in an uptrending market. But the patterns, if the market's uptrending, will give you much more upside profitability. So it's kind of utilizing that, making hay while the sun shines. The good hay is going to come out of these patterns. You can always buy back, yes. So there's a lot of times where I'll sell out a quick trade, get out of it, and get right back in it. So my cost may be 30, 40 cents higher. But I'm not in it for 30 or 40 cents. I'm in it for that big price move. NVIDIA, we're watching, waiting for it to break out right through this level, which I think was right at 110. So if this starts trading positive, we can see that our kind of a channel here, next target should be back up into this area. So this alerts us to exactly when we want to be in something based upon your timing, which makes it much better if you're option trading. So here's Tesla. Look at this on a much smaller scale. Wave 1, wave 2. If this breaks out, you're in wave 3, same magnitude move as this right here. So we can see what's happening in each sector. We can see what happened today in the in Labu, which is kind of an indicator of what's going on in the biotechs. The biotechs are bottoming. They backed off today, but came back up to the higher end of the range. You can be buying Labu, or if this starts trading positive, you know the biotechs are acting strong. Let's see, Nugget getting soggy. So you can see with it back below the T line, two things happen when it closed below the T line. Kind of dispelled the trajectory in this direction, told you things were rolling back over. Is that a shooting star on Tesla? Not really. Remember, you still need a confirmed sell signal. So if I was trading Tesla, I'd have a stop right here that if they started coming in this direction, that means this pattern is probably coming back to test the T line. All right. Some of the other ones that we are in. Max Linear, fry pan bottom, breakout. Definitely could be buying this one on still on positive trading tomorrow. EXAS, this little gap up with a left-right combo, breaking this downward trend channel. Tells you to stay long. Now you're right at the point where if it breaks out through here, your uptrending channel will be back in progress. Court, I think, is one of the biotechs. You can see the J-hook pattern. You can still buy this one with the anticipation this is going to be the magnitude of your next move. Gwen, hang on to your individual ones. When I tell Jim to do the double line, just can request up to two charts we'll look at. We're still in UCTT. Nice steady eddy as long as it stays above the T line. Kayla, another biotech that we're going to get ready to buy. You can see the bullish engulfing left-right combo, then a close above the T line. Get ready for at least a move back up to this level, which would be about a 25% move just to get back up to test the recent highs. AAOI also has been a good one, but it backed off right smack dab to the T line. So this makes our analysis very simple. Can you explain a left-right combo? Yes. As soon as I find another one. Left-right combo is usually, or not usually, it's a doji followed by a bullish engulfing signal. I'll try to find one. But when it closes right on the T line, remember what our criteria is. We want to see a candlestick sell signal and a close below the T line. So if this one opened lower tomorrow, yes, you'd start closing it. If it opens higher, it needs to open higher and trade higher to stay in it. But that T line is a very important level because the probabilities turn against you quite a bit if you have a close below the T line. Cool came up nicely today. Notice your big fry pan bottom, your J-hook pattern, your J-hook pattern. You stay long until you see a sell signal. VSAR, another wave 1, wave 2, bullish engulfing. Wave 3, another one you stay long until you see a sell signal. And BKD, not as exciting, but you had your doji, kind of your little doji bullish confirmation gap up through the T line. First target is probably going to be the 50-day moving average. When it comes back up, Tim, through the T line on a bullish signal again, I'll wait to see if they open up positive the next day. Okay. Some others that look good right now. FMSA. Notice the dojis. Notice your doji hammer gap up, best friend. There's a gap right up here, so at least you know it could be heading up here, potentially to the 200, giving you a little bit of price move in your direction. Same scenario on silica. Hammer, gap up. If this opens positive, you can be buying immediately your doji sandwich with the anticipation it's coming back up here to test the 50. Freeport finally got some strength in it. It needed to show good strength closing above the T line, which it did. Next target is the 50, and then there's a little gap up here just above the 50 that it could fill. Energy recovery, another set of dojis, your cradle pattern gap up. I'd be buying this one. Now you just watch to see what happens once it gets to the 50. CRCM, J-hook pattern in progress. When you have a doji up here in the overbought condition, we have a simple rule of the doji. It's going to move in the direction of how they open it. So if they open it positive, we know we've got a doji sandwich going, which means we're still in wave 3. Carol, if the bigger the portfolio, the higher you want to get up in volume as well as usually stock price. So if I've got $1 million portfolio and we're buying 12 positions of $80,000 a position, obviously we're not going to buy a very much of, or often look at a $6 stock. We're going to be looking at the $40, $50 stocks. If you've got a $30,000 portfolio and you're buying 6 positions, 5,000 a piece, yeah, now you're looking more at the $5 or the $5, $6, $7 stocks without too much problems. Elliot, not necessarily telling you that the buyers are coming back in. All it's telling you is you're in an uptrend. The T-line's been a factor, and the T-line's a factor again. So the one thing you always have to keep in the back of your mind is that nobody has the T-line on their charts, or the percentage of people that do is so minuscule that it doesn't act like a magnet like the other moving averages that everybody else has on their charts. So when it closes right here, that's that kind of Fibonacci support level that we can make a decision. The fact that there was a tail to the downside, yeah, it's good that they brought it back up. Had they closed down here, I'd have closed out the position. Tomorrow, I'm waiting to see what they do to see if they're going to take it higher. Could that be a hanging man if at top of a trend? This one, now remember your tail on a hanging man has to be 2 times greater than the body. End tap, kind of a scoop pattern. Make this a little bit bigger. Scoop pattern, I'd still be a buyer of this one on positive trading. What do we expect coming out of a scoop pattern? That big slingshot effect to the upside. Let's see, I've lost my own handwriting here. SBGI, another J-hook pattern in progress. You can be buying this one on positive trading. CMTL, Same scenario. Notice where it pulled back to, right smack dab to the T-line. Now, when I say right smack dab to the T-line, remember, most people don't even have this on their chart. We can see that it's acting as a natural support level. CNAP, there's your Morningstar signal. There's your uptrend. There's kind of your double doji sandwich breakout. I'd expect more upside from here. To you, another J-hook type pattern. There's your this is a left-right combo. There's your doji followed by a big bullish engulfing signal. As I've just finished up a 4 training video series that we'll be putting out to members first on the high profit signals and patterns. The question we always get asked is which signals and patterns are the best? And the answer is we've already narrowed them down. Out of the 50 or 60 signals in the Japanese candlestick universe, we've narrowed them down to the 12 major signals. So we've already picked out good ones. The kicker signal obviously is a very strong one. But there are patterns like the doji gap up, your best friend, or your left-right combo, or your fry pan bottom breakout. So we've got that in a 4 training series where we go through the best doji patterns, the best signal patterns, and the best pattern patterns. And then the 4th video is quantifying all of them in order with the best one down to the 12th one. Not that it's that the 12th one is any worse than any of the others. It's just on a quantitative basis. That's right. Here comes Roy Rogers' horse. So that's going to be available here very soon. And that's probably about as meaty, other than your 12 major signals and your patterns in general, that the quantitative packages is something you want to have in your inventory of reviews. PTCT, another little fry pan bottom starting to come back up. You can be buying this one. HIIQ, there's your bullish harami, telling you the selling has stopped. There's your doji sandwich breaking up through the T-line. You definitely can be buying this one on positive trading tomorrow. Get rid of that little thing. An ARCO, one of the restaurant chains, J-hook pattern. Oh, I skipped some over here. We were short BGFB, but very simply stopped out when it came back up through the 200. Now look what it's done. It did a doji that came back, tested both the T-line and the 50. If it opens positive tomorrow, what do we have as far as confirmation? 1, we've got the potential of a doji sandwich. 2, it'd be breaking this downtrending channel. 3, it would still be confirming that our up move is in progress, probably giving you a good strong move out into this territory. So the advantage we have also of knowing what should happen after each signal and where just gives you much more clarity as far as where a breakout could occur. Now, BIDA is the exact opposite. We know where the breakout should have occurred, which is right here, going into a J-hook pattern. The fact that we had a bearish engulfing signal right at that level told us exactly opposite of what was going on as far as a J-hook pattern breakout. They aren't doing it. You close out the position. ATRA. There's your inverted hammer. Again, this is the reason we want to have people know what's going on with the 12 major signals. The inverted hammer, although it's probably the least frequent of the 12 major signals, is probably the highest percentage on a positive open the next day and trading positive, that you've got a 95% probability or greater that you're going to be in an uptrend. I'd be a buyer of this one on positive trading tomorrow because it would also be confirming this break of this downtrending channel. And BIDA, not necessarily, because those aren't really that big a shadow. Yeah, that's really just kind of a normal kind of trading, let's say, candle. New link. There's your J-hook pattern. There's your gap up doji. And what's our simple rule of a doji? If it opens positive, you want to be buying immediately because that candle and this candle will probably be the same, which means your J-hook pattern is working. BNCN, kind of a little scoop pattern. There's your left-right combo, kind of a doji, hammer, bullish engulfing right behind it. Then your doji sandwich, you close right on the 50. If it opens positive tomorrow, what's it telling us? It's confirming our doji sandwich and telling us the 50 is not acting as resistance and telling us that this little downtrending channel is not acting as a resistance. How positive do they need to open? Positive means when we wake up tomorrow, we don't want to see that the pre-market futures are showing that the Dow is going to open up down 75 points. We want to see that the Dow is going to be opening flat or positive, and this stock is opening positive. Now, it closed at 35.20 today. If it opened up at 35.27, I'd watch it for a few minutes, see if they're still taking it up or whether they're backing it off. If they open it up and they start backing it off, I don't do anything until they came back up through the open, because if they open it up, bring it down, and then come back up through the open, that tells you the profit taking is over. It's confirming the signal. That may take 2 minutes. It might take 15 minutes. On the short side, as soon as you see something close below the T-line, again, the probabilities are going against you, that you definitely want to be out of that trade and get ready to go short. Anytime you see a close below the T-line, close it out. Again, that was the whole point of closing out BIDA. When it closed below the T-line, what's the worst case scenario? It opens positive and starts trading positive, you can always get back in. But right now, the probabilities are saying it's time to be out of that trade. And HIMX, there's kind of your hanging man. There you had a shooting star, hanging man, doji, hanging man, bearish confirmation. Where's your next likely target? Probably coming back down to test the 200. Remember, anytime they go through a potential resistance level, they usually come back and test it to see if it's going to act as support. And LJPC, same scenario. This wasn't a sell signal, but it was a close below the T-line, enough to say get out of the position because it kind of depleted your uptrending channel. You could always get back in if it closed back up above the T-line. Now you've got that slow curve. You're probably heading back down to the back down to the 50-day moving average. Now, this is a perfect reason or example of wanting to have a few short positions in your portfolio. Even though the market may be in an uptrend, you never know if there's going to be a big day where all of a sudden the profit taking comes piling in. At least you know your short positions. There's on a day like this, your short positions, you may only have 2 or 3, but at least they're offsetting the some of the profits or gains you might have made from the other positions up to that point. If a stock is trending up, will you not have to get in and out? Gary, I don't understand the question. No, not yet. When I say, Jim, do the double line, that's when you ask. Do you basically move in and out of positions based upon the T line? Do you ever hold positions whether or not they move back and forth across the T line? What is the average hold time in this case? Gasly, the T line is an indicator. If it starts moving up and down and above and below the T line, tells you don't want to be in the position. So right here, if I got back in this position because it started trading positive, I'm back out when it comes back down here or even comes back down through this level. When you start waffling on the T line, what's that pretty much tell you? That the price is waffling. You don't want to be in that trade. What charts are you watching to get in and out of trades? 1, 3, 5, or daily? Daily. If I'm going to be day trading the stock, I want to see what it's doing on an overall basis. If I think it's in an uptrend, obviously I'm going to day trade it to the upside. If I think it's in a downtrend, oops, I don't see one on here, I'm going to trade it to the downside. If the market is heading up, I'm probably going to be looking for stocks that are trading up so I can trade it on the upside. If I see the market is heading down, I'm probably looking for bearish stocks that I can day trade to the downside. If you start trading with $1,000, yes, you can trade with any amount. Now, obviously, the lesser the amount of money, the higher your costs for commissions are going to hit you. But whether you're trading with $1,000, $100,000, or $1 million, the first thing you want to do is make sure you've learned your trading technique. And if you're doing it with $1,000, you can learn just as well as if you've got big money in there. There's a difference between paper trading and trading with your money. When you've got your money on the line, your emotions have a completely different perspective of what to be doing. If you miss getting back in, EXTR, yeah, there's nothing, if you can't worry about that, because there was nothing to tell you to be in this. You want to be in situations that tell you what to be doing. If you're out of that trade, that's because there was nothing to tell you to be in that trade. Now, that doesn't negate the analysis of what to do. We know what type of signal this is. That's the message. Big gap up. What's the big gap up tell you? Somebody is in there buying this with great enthusiasm, and then it was profit taking. So what's this message? That there's a lot of buying force. Now we're just waiting for the profit taking to be over to start getting in. Definition of day trading is that you're in and out during the day, Carol. How do you avoid being stopped out intraday trade that takes the trades below the 8 T-line since many of them close above the T-line? Mike, if you get stopped out because something goes below the T-line, all right, you're stopped out. That meant there was selling. Doesn't stop you from buying back in when it comes back up above the T-line. Yeah, if you've got something that's going up and down around the T-line, it means it's not in a very strong trend. Go find another chart. And I say that easily because every single day that you do a scan, there's probably 5, 10, 15, 20 positions out of the 10,000 out there that are going to be excellent buys. So even if you get stopped out of something or you've got one that's not doing very well, my philosophy is why stay in something that looks iffy when you've already scanned and found something very strong. Yeah, unless it's in and out, or trying to get in and out on an option, Carol, you've got the disadvantage of the bid-ask spread. Let's see. Do you ever use linear for what? It's difficult to choose from the list I find in these discussions. Carol, that's where the process of quantifying which ones are the strongest becomes very effective. So that's when we do our scanning uh, technique training. First of all, we want to know what we're looking for as far as the strongest ones, so that when we go find the good ones, we can start cultivating down to which ones are the best. Uh, Gasly, no. I'm a swing trader, so usually my trades last for anywhere from 2 to 10 trading days on average. If you're in a steady uptrend on something, might last for a couple months. That becomes your steady eddy. But if I've got a steady eddy, if I got what I really want to have is 10 steady eddies in my portfolio, because then I know what my criteria is. I just continue to hold until I see a sell signal. But very rarely is that going to happen. But if I've got 4 steady eddies in my portfolio of 10 positions, that means that's an instantaneous analysis each day. Just stay in it, just stay in it, just stay in it till I see a sell signal and a close below the T line. That means I've got 6 that I can concentrate more on to see what they're doing based on their chart patterns. Al, I usually use Wharton Brothers TC2000 or Metastock. But those are inexpensive, very effective. They well pay for themselves each month. We should wait for the daily candle to complete before making a decision. If it's trading below the T line and then closes back up above the T line at the end of the day, is this a rule to always follow? Yes. You wait till the end of the day. Where was something? That wasn't it. Oh, this one yesterday. Everybody was panicky because it was trading. Cool was trading way down. No, this one wasn't it. Darn, I can't remember. There was one that looked like this, but it was trading well below the T line during the early part of the day. But at the end of the day, it was back up and then continued up further today. So the very simple rule is if you're going to buy and sell based upon a candlestick daily signal, then you wait to the end of the day to see what that daily signal is going to be. Hold on to your individual ones. We'll get to them all. Is there a candlestick scanning tool that you know of for MT4? Just use one of the, again, there's separate softwares. Okay, Mozart did it. Was it yesterday? Yeah, it came back down, came back up, but there was one, and I can't remember which one it was, that was trading below the T line. And I thought it began with, I'll find it as we go along. Fabian, one thing that I try to teach here is we are going to find the big price moves. But I also tell people that no matter how good your trading program is or your charting technique is, 1 out of every 3 trades, 33% of your trades, is not going to work. So it's just important to be able to analyze that. And that's part of that emotions, keeping your emotions out of your trading. It used to be, for me, because I was so smart, but every time I put on a trade, it should be going up because of my superior analytical abilities. And when it didn't go up, it was because people that weren't as smart as me didn't understand why it shouldn't be going up. Now I know when I put on a trade, there's a 33% probability that it won't work. So as soon as I see that, I close it out, and instead of worrying about it as being a flaw of my mental capabilities, I just know that was the probabilities. Take your money out quickly and go on to one where you've got the probabilities much better in your favor. And I don't think it was true. I don't remember looking at true. Well, see, it was lower today, but still bounced up off the T-line. Use get Warden Brothers. It's either $97 a month for the live feed or $37 a month for the delayed feed. It was ATRA. Oh, that never got below the T line. Oh, yes. It got back up to the T line and then back down. Fabian, if you're in the chat room during the day, you're going to get a lot of ideas out there. But the whole point of being in the chat room is double-fold. One, you're going to get a whole supply of beneficial charts to look at. And two, if you have questions, you can, is Warden down to $45 a month? All right, it used to be 97. If you've got a question about one, you can ask, and you get a lot more explanation of why a chart looks good or doesn't look good. Danny, I had that problem too. So, yes, the one simple logic that I use when I buy a position is if I look at it and it's not doing right, I ask myself, all right, why did I buy this position? And if it's not doing what I thought it should be doing, I close it back out. Oh, Dave, a very simple scan is I'm looking for all stocks that are in my trading universe, which is stocks greater than 5, trading more than 200,000 shares a day, and with stochastics in the oversold area, producing a buy signal. Or my simplest one is which stocks have had the biggest percent price move today. They might not be in the oversold area, but they may be doing a pattern. Gabriel, everybody in here should be keeping a journal because our minds are very fickle in the sense that if you do something stupid or do something wrong, what's the first thing you tell yourself? I'm never going to do that again. You're going to do that again because that's how human nature works. So I've discovered if you have a journal, at the end of each day, you write down what you did wrong and you write down what you did right. Because what you're trying to do is reinforce the good things that you did and recognize the bad things. And I use that as a additional discipline because I use the illustration that if I bought something and I said I should have put a stop in at X level, and then 3 days later I write down, man, I should have put a stop in at X level. And then 3 days later I write down with much stronger forcing into the paper and exclamation marks, I should have put a stop in. What that does for me is it makes me think, what if somebody ever picked up my journal, said this guy wrote down that he should have put a stop in, and 3 days later he wrote down the same thing, he should have put a stop in, and 3 days later wrote down the same thing. If I was looking at that myself, I'd say, boy, this guy was stupid. He knew what he was doing wrong, and he wasn't correcting it. So I use the equation that if you do something stupid and you don't write it down, after 8, 10, 12 times, it might start sinking in. If you write it down, maybe after the third time, it starts sinking in, and you learn your discipline a lot faster. Okay, Jim, go ahead and do the double line. Yeah, you did the belt hold on OXM, and it confirmed the next day, so that's your buy signal. Okay, and in 2.8 seconds, do another double line. Oops, I can see you were late. All right. THM. Nothing to do here except stay long. You can still be a buyer if it breaks out through this level right here. Oh, remember the special. Becky, you want to put the link in for the special one more time? Just so people have it. MYRG, another one. I want to see more strength on this because you are in this slow uptrending channel. So if you're buying it, you definitely want to see strength moving out of this area pretty quick. DRI, another one that's in a, whoops. Let me go back to the last one just to make sure. Okay, yeah. DRI, you're going to be in a, there's your best friend breakout. You're going to be in a 45 degree. So at this point, you just stay long until you see a sell signal and a close below the T line. Foot Locker, you can buy this one. There's your left-right combo, right smack dab on the 50. Your doji sandwich breakthrough. You can be buying this one on strength. Just use the T line as your stop. GPN, another gap up. You can buy this one on strength. I'd probably buy it if it came back up through this level, breaking out into new territory. Deep low, nice little slow curve. You can buy this one on positive trading, breaking out through this area. Again, there's kind of your morning star bullish engulfing signal. APOP was moving a few days ago, but now you can start buying because the profit taken is over. Came right back smack dab to the T line. You can be buying this one on positive trading tomorrow, kind of anticipating that there's going to be a lot more activity. Kara backed off today because they came out with a new stock offering. Yeah, I didn't see it actually hit this trend. It didn't quite get there. I would stay long. Usually what happens after an announcement of a new offering, you get a knee-jerk reaction selling, and then everybody realizes they're coming out with a new offering because they're expanding fast enough. They need more money, and they start buying back in. AMAD, I would wait for 1425, knowing it broke out of this wedge formation. Micron, stay long, as long as it stays above the T line. U.S. Steel, nothing yet. It needs to get back up above the T line, and I probably wouldn't buy this until it broke out through the 50, which is also this downtrending channel breakout. They scrolled past me again. RGLS, stay long. You can be buying this one. Nice fry pan bottom. CLSD backed off a little bit, but is still in the fry pan bottom. You stay long as it stays above the T line. Southwest, if you're long, stay long. It needs to stay above the T line. If I was buying it right now, I'd wait for it to get back up through the 50. Bidu, not a great looking chart. If you like it, you can stay long. It doesn't have a true signal. This is not quite a belt holds or a piercing signal. So I'd stay long, but the first time I saw a sell signal, I'd come back out and then wait for the next buy signal. Netflix is breaking out into new territory. Click. Nothing. Make it even bigger. Still nothing. More than likely, it's a slow drift until it hits the 50, and then you start watching for your buy signal. Weibo, you stay long on this one. But if it opens lower tomorrow, it's probably coming back down to test the T-line. So instead of having a trajectory like this, you're probably going to be in a sideways trajectory like this. NPTN has to open positive if you're in it. It has to open positive and trade positive to stay in it. If it opens lower, it's fizzled. There's no direction. Close it out and move on to something else. SSW, you can buy this one on positive trading. Make sure your volume is good. OPTT, another one. You better make sure you've got a lot of volume and it's not that exciting. It needs something to tell you the bulls have definitely come in. The Treasury notes, they're stuck in a sideways channel. So if it starts trading back below the T-line, you can see your trend channel probably coming back down into this area. And let's see, the U.S. is the 30-year notes. Kind of the same scenario. You're in a kind of a trend channel. Do we do Micron? Yes. Nike. Yeah, I'd probably be going short if it came down through the 50, confirming. It's not a great chart. Doesn't show any strength one way or the other. I don't know what those symbols are. SV. Citicorp. Doji sandwich. You can stay long on this one. It doesn't make you a whole lot of money. But if Citicorp is trading positive, that means the market is probably holding up well. Viacom, for some reason, there's not a big chart on that. Don't know why. Baxter. Is this my charts? Nothing there either. Don't know why. Lost some. Might be my charts. There they go. All right. Unit, you can buy in positive trading with the anticipation that even on a day trade, if tomorrow, if it opens positive, the magnitude of this candle and this candle will be the same. They should take it almost right up to the 50-day moving average. Did I do Nike? No, that's not the one. EIAB. That's a good little breakout. Doji sandwich breakout. Stay long. You're in the overbought area, so always keep your stop at the previous day's open. Baxter. Slow curve, fry pan bottom. Not a very exciting one for profitability, but it's still heading in an uptrend. S-Zan, or Z-Zan. Morningstar right here. Stay long, but it has to open positive tomorrow. OCLR, getting a little bit toppy up here in the overbought area. If it starts trading lower, I'd come out of the position, watch to see what it does at the T-line. Goldman has to get back up above the T-line. If a failure there, kind of will put a little damper on the whole market. And Nugget starting to roll back over. So it looks like it's failing. So look for the next target to be coming down here and testing the lows again. Two Harbors. Don't know what to tell you there. I would probably be out of it with it gapping down yesterday, not getting back up through the T-line. AMAT has to open positive also to stay in it. If it opens lower, you can see how the trajectory has disappeared. BLK has to open positive tomorrow. If it opens lower, you're going to be stuck in a bobble for a few days. Price line, just stay long, as long as it stays above the T-line. Tesoro, this one, if you'd gotten in over the last couple of days, should be back out of it. It's still in a downtrend, and I probably wouldn't even be shorting it because there's not enough movement to it. We did US Steel needs to get up above the T-line. PTX. PTX. I'd be someplace else. Oh, is it an island reversal? No, it's a gap down. Yeah, I wouldn't be long or short. Well, you can't be short this because of the below $5. I'd probably be trading something else. Comcast, another one that doesn't have any real great magnitude of movement to it because it's an institutional trader, and I probably wouldn't trade it until it broke through this downtrending channel. So it still needs some more upside. SSI, that one you can get ready to buy on positive trading tomorrow, coming out of this slow curve. Hold. Just sideways. I'd be someplace else. I think we did OCLR. NM. Another one you can get ready to buy on positive trading. A doji sandwich break to the upside. CBay. You can buy this one on strength. J-hook pattern breakout. An AUPH you shouldn't be in. It's been trading below the T-line. Nothing there. Probably have to wait until the stochastics get into the oversold area. One, that's not working. CNXP. This one, it needed to open positive. Now you're back into the trading range. If you bought it over the last day or so, get back out of it. It's gone dead. Mozar, we did. That's a nice fry pan bottom breakout. We did FTNT, Bank of America. Just not very exciting. Your rate of return isn't all that great. So if you're trading the options, that's the only way to really trade this one. Yeah, Lulu went boo-boo today. So you might still get ready to short this. Remember, that big gap down will probably be followed with weakness. bearish kicker signal. UNVR, you can get ready to buy this one. You still need to have it break this downtrending channel. I'd probably be more apt to buy it above the 20-day moving average. Flexion, get ready to buy this one, but I'd rather pay 17 for it knowing it broke out to the upside. And GTN, this one you can buy on positive trading. J-hook pattern, just use the T-line again as your stop. And PMT, there's your inverted hammer, bullish confirmation, gap up through this area. Stay long. You're in the overbought area, so don't let it trade back below today's low. It needs to continue to trade above that level. Hewlett-Packard, cradle, more of a scoop. Remember, a cradle usually ends at the bottom of a downtrend. This looks more like a scoop pattern, but still effective. Notice your series of dojis. Get ready to buy this one on positive trading, breaking out through this level. Zynga, you can start buying this one. Just make sure your volume is pretty hefty. Bath, okay. Give the dog a bath. Yeah, that's kind of a left-right combo. I'd be a buyer if it broke out above this level. You can see the trading channel sideways. Do you close out positions, some positions, so you don't hold them over the weekend? Carol, no. The charts don't correspond to your discussion. Oh, Alan, I don't know what to tell you there. I forget what. Yeah, I'll hold over the weekend. Remember, the signals are the accumulative knowledge. If you closed out your positions every Friday, worried about what was going to happen over the weekend, which probably happens once every 4 years, you're going to be giving up a lot of profitability. I think we did these. DRI, MXL, all looks like 45 degrees. MEO, get ready to buy this one on positive trading. If it opens lower, you come out of it and wait for your bobble pattern. MAKR, get ready to buy this one on positive trading. Breaking out. Here's your fry pan bottom, J-hook pattern, so that's your classic. Chipotle broke out through this resistance level. Stay long. You're in the overbought area, so put your stop at the previous day's open. WBMD. Oh, nice big breakout. Consolidation back to the 200. Put a buy stop right up here. If it comes up through there, the profit-taking consolidation is over. And Alta, very slow uptrend, not a big percentage mover. This is more of an institutional trader. When you enter a position, do you immediately place a stop loss order? Not immediately, because I'm usually sitting here watching. But let's say I decided to buy this one tomorrow on positive trading. I'd already mentally know that I shouldn't trade back through here. So if it started trading back off, then I'd probably put my stop loss in. But a lot of times I'm just sitting here. Now, if I bought my positions and I'm going off to do something, then I'll put my stop losses in at levels that I know they shouldn't be trading if they're in an uptrend. ADNT, Has to open positive tomorrow. IDCC, nothing. No trend to this. I'd be someplace else. NVIDIA, we're waiting for this one to break out. We've been discussing this one in the options room. That if it comes up through the 110 level, breaking out, you want to be buying because now you have a wave 1, wave 2, wave 3. Good option trade setup. Kroger's really not anything active to trade. I wouldn't be long or short this one. Kroger had a good run for a couple years. Now it's just kind of moving sideways. Even if it moves, the percentage move is extremely low. And Tazar, you can start buying this one. And just use the T-line as your stop. Dave and Buster's, just stay long, as long as it stays above the T-line. NRZ, this one you can be buying. I'd be more apt to, if you're buying, you just watch to see what it does at this level. You do have a bullish doji sandwich. QCOM, nothing here to get excited about. I'd be someplace else. IMMY, you stay long. After the big doji, it had to open positive and trade positive to stay in it. If I was long, I'd have my stop right now set at this level. It shouldn't come back down through there. BCEI, that's a nice slow fry pan bottom with a doji sandwich breakout. You can buy this, just be conscious of the 200. Panera, I'd use today's low as my stop. It shouldn't come back through that direction. Otherwise, you stay long. PDX, you should be out of this one. Wouldn't be long or short this one. Goog, you can be buying this one if it comes back up through the high of today. And the junior golds, nothing here. Shouldn't be long. Probably be more apt to go short, especially if it came back down down through today's low. Your waves are wave 1, wave 2. If it breaks out, now you have wave 3, which will be the same magnitude as wave 1. Jason, you can. And that's what you have to decide. Now, if they open this up tomorrow and started taking it up pretty strong, I would definitely have my 10-minute chart open. And as soon as I saw selling and it come back through the 10-minute chart T-line, I'd take profits. Why? Because if you move up here further, look how far away you're moving from your T-line. So it came out of this nice slow curve. So use your 10-minute chart for profit taking. We did Tesla. Tesla, you just stay long, but it needs to open positive tomorrow. Square, nothing yet. Right now you can see you've got a congestion area. So either you're in a fry pan bottom or you can be a buyer if it comes back up through yesterday's high. That would tell you the pattern is working. AAOI has to open positive to stay in it. If it opens lower, close it out, but then watch to see what it does at the 20, since the 20 seems to be the trend channel support level. LRCX, just a nice steady eddy. Hasn't been able to close below the T-line. You just hold on to this one. Xerox, did we do? Xerox, you can get ready to buy this one on positive trading, breaking this little downtrending channel. FedEx. Oh man, we're way past our bedtime. FedEx also needs to break out. If you're long, you stay long. I wouldn't be a buyer until it breaks out through this level. Wynn Resorts. Stay long. Use the T-line as your stop. We did Goldman. Fuel. Stay long also. Use the T-line as your stop. That could have been it. Yeah, where it came down. But it was another one. Was it CORT? No. Son of a gun. What? I remember it just began with, I know it began with a C. So anyways. All right. Let's call it a night. I kept you all the way up past your bedtime. We will see you bright and early in the chat rooms tomorrow. We'll see you then.